Market impact of the U.S. airstrike that killed Iranian General Soleimani. We have Mohamed El-Erian, Allianz's chief economic advisor, joining us on the phone. So, Mohamed, this morning I heard you a couple places kind of talking about the idea that investors would likely fade the moves that we were seeing right after the action. Now, during the day, we've gotten more news, U.S. troops heading to the region. Do you still think that investors will be fading the moves?
And they have. The market losses are less than what they were initially, and that reflects the deep conditioning that investors have had. It's not to say that there hasn't been an escalation of tensions. There has been, and we are likely to get some sort of retaliation. But markets believe two things very strongly. One, that this will not be a full-scale war, and secondly, that the Fed is on the sideline and will intervene if there's too much market volatility.
Mohamed, Miles Upton here. I want to ask you, actually switching gears just a little bit, something I know you were paying attention to, kind of that manufacturing data that we got earlier today out of the U.S. and just, we've got the Iran strike, we've got mixed data coming out. There's been a real narrative over the last couple of weeks formed about the strength of the turnaround we would see in the U.S. and global economy into 2020. Do you think that those stories are kind of put at risk by what we've seen so far today?
So I think there's three takeaways from that number, and that speak to your more general question. One is manufacturing is suffering, whether it is in Europe, China, or the U.S. It's a global phenomenon, and the U.S. is not immune. Two is that will complicate the recovery and the nice narrative that we've heard about the global economy. I think what we're going to see is will turn out to be just a cyclical uptick in Europe, not anything more sustainable. But three, importantly, the U.S. is in a better place. Why? Because its manufacturing sector is relatively small, and the consumer remains strong. So I see it as a confirmation of a global story, but not as fundamentally changing the outlook for the U.S.
Mohamed, Brian Sazi here. Do you feel as though we are in a short-term valuation bubble? I look at the small caps, very aggressive valuations on them now, aggressive valuations on the S&P 500. Is it justified? And if not, what pops that valuation bubble?
So it's justified because of favorable market technicals that are fueled by enormous liquidity. There's been an over $600 billion expansion in the Fed's balance sheet in the last 4 months. That's a very big number. They don't call it QE, but in terms of its impact on asset prices, it has a QE impact. Add to that the ECB, and it's very hard not to be constructive short-term. However, the medium-term uncertainties are increasing. Today is another example of that. So the key challenge for the investors, not just to be exposed to the market, it is to keep a claim on the upside while increasingly protecting against the downside. That is what they should be doing right now.
So we have, the U.S. is bracing for some sort of retaliation from Iran. We have the U.S., multiple reports about moving troops in there. So the story certainly doesn't seem to be over. For an investor, what do you do here? I know you've said that you have been basically increasing your downside protection. Does this change anything? Do you increase it more? What should investors be thinking here?
No, you continue to do it gradually because you can't ignore the favorable short-term technicals fueled by liquidity. So it's about taking an opportunity to go up in quality, emphasizing balance sheet strength and cash flow generation. It's about not fading the U.S. too early. You're going to hear lots of people, the same people who have been saying it for the last couple of years, swap out of the U.S. in favor of emerging markets or international exposures. Not yet. The time will come for that. But the time is not now because the U.S. has a lot more robustness and agility than others. And then finally, it is to be very conscious that this incredible period of liquidity have made people take too much liquidity risk. I don't think there's enough appreciation of inherently illiquid asset classes. So have those as your three guiding principles and use market openings to continue to reposition over time.
And then, Mohamed, just quickly, I guess the question that I'm kind of thinking about longer term here is, does today's reaction to this news indicate to you a market that continues to remain strong, kind of the way we saw 2019 finish out, or does it indicate a market that is perhaps a little skittish and investors, we hear so often, looking for excuses to lighten up perhaps because we have seen such a relentless rally around the world over the last 6 months?
If I had told you a few weeks ago that the U.S. would have this sort of airstrike and would take out someone that has the standing and reputation in Iran that Soleimani had, I think both of us would have said the initial pullback is going to be bigger than what it's been. And what has actually transpired tells you that investors have been conditioned over and over again to buy the dip. They've been conditioned not to extrapolate geopolitical or political shocks. And you know what? That has served them extremely well. You've made a ton of money by following that strategy. So you need a major escalation to get people out of this condition. Otherwise, it's going to prevail. And you know what? It has made people money. My worry, and I keep on saying that, is don't ignore the mounting medium-term uncertainty. So yes, keep a claim on the upside, but do it in a selective manner that also acknowledges that we are facing more and more uncertainties that are going to play out in the next 2 years.
Always good to get your thoughts. Allianz Chief Economic Advisor Mohamed El-Erian, thank you so much.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.